Hello class, my name is Travis Ludwig and today I'd like to talk to you about the history of the federal income tax as well as the differences between the individual income tax and the corporate income tax that a big business like Google or Disney might pay. But before I start, I'd like to tell you a little about myself and why I chose this particular topic. I am currently a senior accounting student at the University of North Texas, planning to graduate this December, and then immediately in January I am going to be attending an internship at a top 10 national accounting firm where I will be doing income taxes. But uh, why I chose this topic as well is because income taxes affect every single one of us, and despite them affecting every single one of us, a lot of people don't know much about where they came from or how they work. So just to tell you about a little bit where they came from first, the first instance of a federal income tax comes over 100 years into the country's history. In 1861, Abraham Lincoln needed to find a way to pay for some of the expenses that had been accruing from the Civil War. And he and his advisors decided to institute a flat tax of 3% on all the income over $800, which at the time and adjusted for inflation was not a lot, but significantly more than it is today. And this tax lasted from 1861 until it was repealed in 1873, and it paid for the war expenses so well that the idea stayed in the populist political party's agenda until it was ratified into the Constitution in 1913 with the 16th Amendment. So the 16th Amendment gave Congress the power to levy tax on all of your income, whatever source derived. And at the beginning of this tax, it was only 1% of your income, and cover the exemptions at the beginning covered most of the middle class. So the only people paying income tax at the inception of it was very high net worth individuals, and most of them got out of it through other loopholes. But as it went on, they began to add more teeth to it, and in the height of World War II, the highest the tax rate, actually the marginal tax rate, got to was 94% of all your income over $200,000. And adjusted for inflation today, that'd be around $3.3 million. And obviously, that was for the height of World War II. It's come back down since then to bring you to today's tax brackets. It's currently 10% on the low end and 37% on the high end. But to tell you how they work, the United States has a marginal tax bracket system. So that means on all your income up to a certain amount, you're only taxed 10%. And then on the next bracket, you're only taxed 12% on that amount of income, so on, until you get to 37%, which I believe is $520,000. So all your income over $520,000 will be taxed at 37%. And a little more facts about today's taxes. Individual income tax accounts for 54% of the federal revenue, and which is the highest percentage. The second is payroll taxes, and the third, actually, surprisingly, is corporate tax. They only pay about 8% of the federal revenue. So to go on to individual taxes, the individuals like you and I, we pay our taxes on a form called a 1040. And so on that 1040, you would list all of your income, and then you have deductions, which reduce your taxable income, and then you'll have credits, which reduce your tax liability. And I know it's a lot to take in right now, but You get your taxable income, reduce that, pay your percentage from your tax brackets I discussed earlier, and then you reduce that with credits. And there's several forms. There's a Schedule 1, A, B, C, for depending on different business owners, like if you're a partnership, a sole proprietorship, and that's how you can claim that income on your taxes there. And the next thing I want to talk to you today about is corporate tax. And so all C corporations currently pay a tax percentage of 21%, and that actually was brought down in the 2018 Tax Cuts Jobs Act, and it has been steadily decreasing since the 50s, as well as individual income tax bracket. And I know that was a lot to take in, but I'm glad I can tell you a little bit about income tax today. And if you haven't, hope you enjoyed it, and thank you.